Good weekend, all. Ira Epstein of Linn Associates with your agriculture update, and this is for the weekend of Friday, the 12th of April, 2019, getting on to 4 p.m. Central Daylight Time. We worked really hard today working on our morning videos, and I think we've hit a bunch of areas that were some roadblocks for some of you. I think Monday morning you'll like what you see. Getting it out was my biggest thing. I wake up 5 in the morning and I start working on it. Let's talk, though, about the weekend edition of what we do. We look at a monthly chart, and then I go to all weekly charts in the agriculture. We do a small review, and I think the biggest event is that we've seen pork purchases out of China. We know that they need more, but it doesn't mean they'll buy it just from the U.S. They could buy more pork elsewhere because they've culled about a third of their herds due to African swine fever. Now, that's also weighed on the soybean and the corn market to a degree because they have less animals that need feed, and they're not buying from us right now anyways. We haven't, succeeded on a deal. We'll see where that all comes in. As we take a look at a monthly chart of closes of soybeans, we're still staying under this 929 level, which is the 18-month moving average of closes. So I think the market has overall, while it's got an upthrust going through here, it hasn't taken out one of these closes on a close basis, the lower one, it still has resistance in the market at 929, so the bias remains down. I'm going to keep on this Fibonacci study for a bit because it's been working. You can see you've gone from 1071 last March all the way down in this past July then to 810.5, and that's the range you have been stuck in. This bounce in the market was a 38% retracement of the Fibonacci level. You've not made it to a 50% level. And obviously, as you look at this, and it's a weekly chart, if you were to take out this 880 level, it would not look good on it. And on the other hand, getting up, well, we'll see what that does. Here's what I mean by that. The pattern right now is lower highs. That's been the legacy of it with the lower highs, and it had lower lows. But over the past 3 weeks, that's changed a bit. I can now argue that you got higher lows and lower highs. So what you're doing is like a triangle, forming the market to come in, and eventually, as that occurs, volatility of the big ranges often comes out. So if you get over 907.25 on this formation, you could actually say you'd have higher lows, higher highs. If you take out 883 without taking out the 907, you then start the pattern again of those not only lower highs, but lower lows. This is all important because you're in a stall pattern right now. The stall pattern's also happening at the 18-week moving average of closes, which is very important. It's important because markets often try to go to a neutral zone to figure out what to do next. I believe that the daily chart, the 18-day, is that, and I believe in the weekly chart as well. And if you go back and you look at your studies, I think you'll come to a very similar conclusion. Could it be the 20-day, the 21-day? Does it really matter? The numbers are going to be so close. When I look at what the market's doing in Bollinger Bands, and I use Bollinger Bands because as an algorithm, they do a couple of things. Number one, they try to keep the market within them 95% of the time. But depending on the shape of the pattern, it starts telling me if the market is winding up for a move or it's been in one. You don't need me to tell you. This was the big breakdown. But now that's not the case. Now you've got this sideways action in the market, and from sideways action comes other trends. It's almost like a spring inside of a pipe, winding up with price energy. As we take a look, momentum is down. So let's define what we have here. We have a downtrend with a legacy because of the lower highs and the prior lower lows. We've gone into a stall because suddenly we have the higher lows. The bias remains down because you're under the 18-week average of closes with momentum down. If you break down the first supports, 877.5, the lower Bollinger Band, with resistance up at 927. In the meal market, notice how you're stuck on this 18 week moving average of closes. Momentum has also gone flat on you. So for the bigger picture, what you've got, you still have the higher lows, higher highs. But the market finished 307.90 under the 18-week average of closes. To get a sell signal on the weekly charts, all that need happen now is you're taking out 305.70. You'd have the lower highs, lower lows under the 18-day average, putting into play the potential, doesn't mean you have to go there, of the lower Bollinger Band at 330. Even if you go up right now, the resistance doesn't change. It just stays at 317.30. But we're at, again, at a real crucial area in this sideways action that the market has been narrowed into. Soybean oil is not the same. You'll notice it had the sideways action right through here. Then it eventually broke out of that, pushing the market to the upside, just missing at that point the 100-day average and pulling back down instead. The Bollinger Band stopped the rally, and the market's just now playing at the 18-day average of closes. I'm going to say that the trend is down. If you were to take out 29.40 and not take out these lows right here, you could argue that you'd be then with higher lows, higher highs. What do the bears have to do? They have to defend their position at 29.14 and not let it get over that number. Not letting it get over keeps the trend down. Lower highs, lower lows, under the 18-day average is the bias down, and momentum still pointing down. In the corn market, it's a sloppy chart. It doesn't look anything like the beans. It's running what we call the lower Bollinger Band. In other words, it hit it, had one bounce, 2 weeks actually up to the 18-week average, fell back to the band, and for 3 weeks in a row, it's just been running on that band. The trend is down, the bias is down, and momentum is down. Resistance is now the 100-week moving average of closes at 365.25. In the wheat market, the 100-week average has suddenly, for whatever reason, become the important average over the past, if you look at it, 2 weeks ago, last week, and this week it didn't quite get to it. The pattern is a lower high and lower lows. You're under the 18-week average, so the bias is down. Momentum, though, is diverting. It's trying to actually come up a little bit from here. As I look at the market, if it were to get over 478 on the weekly chart, you could argue that you've ended this leg of a downtrend. You'd have higher lows, higher highs, but I would still think resistance at 492 would be rather formidable. In the cocoa market, the market has gone up to the upper Bollinger Band last week and this week and sort of run out of momentum at that point. You are momentum-wise, still pointing up, but you're not pushing prices out very much. The trend up, and you've hit upside targets. In the sugar market, it's more like the soybean complex. Look at the sideways action that's developed here. Now, the seasonals at this time of year are often to the downside. You do have a pattern of lower highs, but I could argue you've got higher lows. So again, that narrowing in triangle pattern happening week after week. Now, almost, 7 weeks in a row or so? Right on that 18-week average of closes. The weekly chart is not giving you anything to do. The coffee market just keeps breaking down. The market was, remember, here in the low 120s, and now you're sitting this week on a close at 90.40. So this market's really let go to the downside. This is the first week in a while that it's made a good test and gotten down to the lower Bollinger Band. It found a little support there. That number was 89.56, and you finished off at 90.40, but there's nothing to hang your hat on. This market's still bearish, momentum down, bias down. Cotton market, you're into serious resistance right here of the 100-day average and the upper Bollinger Band. The trend is up, but you've run into a point where the market's fighting a battle at old highs, and that number, support way back down here at the 74.40 level, that's almost 400 points lower. In the cattle market, void of a trend. I can see a pattern of a higher high and a lower low. 2 weeks in a row, we keep fighting at this 18-week moving average of closes. If it lets go, maybe the lower Bollinger Band, which will come up next week, will be in play. But right here, I'm just not seeing a trend. In the hog market, we know that we've seen China buy a massive amount, I think 78,000 metric tons they bought between March 29th and April 4th. So the prices have been going up on that. It's been a difficult play. Somebody knew something because this market rallied from right here at 54, 53, all the way up, almost went up, what, 60% in price? And nonstop. Very hard to catch markets like that. You know, one of the things that we try to do here, and I try to do, is throw research at you. So in the mornings, what I do is I start off at about 5:36 in the morning. I read a little bit, get myself ready, and then I sit down and I record a video each morning. My goal is to have it in my subscribers' hands by 7:30 in the morning, no later, sometimes earlier than that. I review now about 45 charts because I've thrown in 5 ETFs as well into this. And the ETFs I'm covering cover the major markets that the futures relate to. These are the markets and futures I cover, and I do them in the same sequence every morning, so if you wanted to, you can grab the bottom of the video and slide where you'd want to try it. What do I talk about? The current chart action. I'm telling you what I think the pros are doing. I'm telling you the technical and fundamentals. If there's something overnight that I think should be brought up to your attention, you have it from me orally right then and there and on the chart. And then I'm going to throw out my trade ideas, win, lose, or draw. What's the idea behind it? Well, if you're like me, you want to talk to somebody about your trade idea. Gee, I'm looking to buy stock indices. Is this enough of a break? Just as an example. The hogs, boy, I think they're going to buy even more metric tons. How do I play? Well, I've been talking about options in this a little bit. So that's how you do it. What's the purpose? To get you with your own ideas, either feeling comfortable in them, or if you're waffling, maybe there's a reason why you're waffling. In other words, let me help you with that. What's it run? Well, if you haven't tried it, obviously, 26 cents a day for 30 days. I don't think I'm being overpaid. I'm laughing, of course, but it is funny. All you need to do is go to our website, and under the word education or research, Ira's Morning subscriber video, click it, it explains it, you sign up right there, and away you go. No contract, you can stop whenever you want. I think you'll find it interesting. I'm Ira Epstein. You have a great weekend, and I'll see you all come Monday.